Hey everybody, it's Bunny. How are you today? Bunni Longwell Keller Williams, and we're going to be talking about today is the difference between LLC, S-Corp, and C-Corp. And these are conversations as small business owners that we need to know, especially if you're a real estate agent, small business owner, or even, Johnny's lawnmower service. You're going to need to know these things. And as tax time comes, that we need to figure out how to get the benefits from tax. And who I brought in today is Dianne Griffith from Griffith Law and Tax, Esquire. She's here in Gulfport. She's been a resident down here for about 15 years. And Diane, why don't you introduce yourself to everybody?
Hi, I'm Dianne Griffith. I'm both an attorney and an accountant. Part of my on the law side of my business, I practice in the areas of corporate law, tax, real estate, estate planning, and probate. And on the tax side, I am basically your small business headquarters. I do bookkeeping and payroll, prepare financial statements and corporate tax returns. So it's kind of one-stop shopping for your small business needs.
Okay. And you've been in Gulfport for
15 years here. Yeah, I graduated from Stetson in 2001.
Just down the street.
Basically just never left.
Yeah. And so you're a resident down here in Gulfport, been a Gulfport resident for a long time. So I'm sure that what we're going to talk about today, though, is it just Florida?
Yes, for right now, we're just going to talk about Florida. My law license is limited to Florida, so
Sure.
I'm not going to try to give legal advice for anybody outside of the state.
Sure. So we want to fully disclose that because I do have followers, from all over the place. What we're going to talk about is only in Florida, and what we suggest is to make sure that you reach out to your attorney to set this up for you if you want to go into an S-Corp or a C-Corp.
Absolutely.
And the LLC you can do yourself. For Florida, you can go on sunbiz.org and you can sign yourself up there. But with that said, you may want somebody like Diane on your side to walk you through the rest of it.
I highly recommend it because if you make the wrong choice when you set up your company, it could end up costing you dearly. And that's normally when I get people. They got a recommendation from somebody in the family, a friend, and they said, oh, you want an LLC, you want an S-Corp. They get it set up and they don't follow the proper procedures. And then they get these letters from the IRS, you owe us $5,000, and that's when I get them. And I wish they had come to me at the beginning and said, what is right for me and my business and my personal life. I highly recommend it. Any attorney out there worth their salt will give you a free consult. Just pick up the phone, call someone who's highly recommended, ask to sit down and discuss your situation with them because it will help you in the long run.
Yep. Been there, done this. I mean,
we all have.
I'm a small business owner, so trust me, I've had to lean on people like Diane before. So what she's going to talk about is those differences. Do we need it? We don't know. We don't know your structure of your business.
Everybody's different.
Everybody is going to have a different scenario, and what you need to do is get with a professional. Whether Diane or somebody in your local area, and walk yourself through that. And each scenario is going to be a little different, that's for sure. But Diane is going to take it from here, and she's going to explain those differences to us, so we have a better idea. Is this for me, or do I need to do something different, or do I need to call Diane and figure it out?
Right.
So Diane, take it over.
Got it. The first thing you want to do when you set up a business is you go out to sunbiz.org, and that's the Florida Division of Corporations website. And right on the front page, you'll see a button that says Start a New Business, and you click on that. And the first thing you're going to notice is that there's a profit corporation, a nonprofit corporation, an LLC, and partnerships. But there isn't anything out there that says S-Corporation. And that's normally when I get the first call. Well, I know I need an S-Corp, but where is it in this list? And that's because the S-Corp does not exist at the state level. It's actually a tax designation that you set up with the IRS after you've already formed your company. So let's say Frank, he's a plumber in Florida and he wants to set up his own company. And he goes out onto Sunbiz and he says, well, I'm obviously not a nonprofit, so I'm going to go with either a regular corporation, which we call a C corporation, or I'm going to go with the LLC. And he says, what's the difference? With the LLC, you actually get a higher level of liability protection because the three letters LLC after Frank's Plumbing is going to announce to the world that Frank has limited liability. So if for some reason Frank gets in a dispute with one of his customers and they sue him, all they can go after are the assets of the company. And that's huge, especially if you have a business that is high on liability. I usually have all my construction people set up LLCs, and also my people with rental properties, because there is a lot of liability associated with a rental property. I know you're going to have insurance coverage on your properties, but if one of those properties burn down, you could end up getting sued. And so I normally have my people set up a different LLC for each one of their rental properties. It's a lot of paperwork, a lot of filing fees, but I think it's worth it for the extra added liability protection. So that's sounding pretty good to Frank. The other thing that he would get out of this, and he's only going to get this from his attorney, he's going to get an operating agreement. So if Frank happens to have a partner, he's protected by the terms of that operating agreement. And one of the things in that agreement is a clause that if Frank's partner happens to get a divorce or file for bankruptcy, that the partnership interest is automatically transferred back to Frank. So he doesn't end up with a partner that he didn't want, like maybe his partner's wife or something, whoever ends up getting the partner's assets. So those are things you really want to think about, particularly if you have a partner. Or if you have some extended liability issues that you want to make sure you have the highest level of protection. So Frank says, well, that sounded pretty good. He says, I'm going to go ahead and go with this LLC. I really like the idea of this added protection. And let's throw some numbers into this. Let's say Frank makes $100,000 the first year, and he has $50,000 in expenses, so that leaves him with a $50,000 net profit. And Frank goes to his tax preparer at the end of the year and he says, so I'm just paying income tax on this $50,000, right? Unfortunately, that's not the case. And the reason why that's not the case is because Frank hasn't been paying payroll taxes all year long. And at the end of the year, he's going to have to pay the piper. Not only the employee portion of the taxes, but also the employer. And that's going to be 15.3% of that $50,000. And that's going to be a painful hit for him at the end of the year. It's over $7,000. In addition, he's going to pay income tax on that $50,000 as well. So he's going to walk out of there realistically with a $10,000 tax bill. And that's normally when I get a lot of my clients, because no one told them this. They said you want an LLC, but they didn't tell him to prepare for this tax hit at the end of the year. Frank could go with a corporation instead, just a regular corporation, but actually his taxes are going to be even worse because the corporate flat tax is 21%. That's right off the $50,000, and then he's going to pay income taxes on any distributions he takes out of the company. So what's Frank supposed to do? Well, here's where the S corporations come in. Frank can set up either a limited liability or a regular C-corp at the state level. But then, within 2.5 months, he will file what's called an S-election. It's Form 2553. It's available at irs.gov. You pull it up in a PDF, you type in your information, you print it out, and you fax it to the IRS. Within a week or two, you'll get a letter back from them confirming that you're going to be an S-Corp for tax purposes only. So he can keep his limited liability protection at the state level to protect him from being sued. But now he's getting preferential tax treatment, so he doesn't get that hit at the end of the year. And how does that work? What is an S corporation? Well, the S corporation recognizes that as the owner of the company, you're really wearing two hats. One is the owner, who is entitled to distributions on their investment, but you're also an employee who should be paid a salary. And the IRS lets you take that $50,000 that you had from your LLC and divide it into both salary and distributions. And what they say is you have to pay yourself a reasonable salary. So what is reasonable out of $50,000? I think if Frank says, well, I'm only going to pay myself a $2,000 salary and I'm going to take the rest of it in distributions, I think he's probably going to get a nasty gram from the IRS saying, nah, that's not going to fly with us. But at the same time, he doesn't have to put $45,000 into it either. So Frank says, well, I think I'm going to put $20,000, and let's toss this into numbers. I'm going to put $20,000 in salary, and the other $30,000 I'm going to give to myself in the way of distributions. What the IRS requires that Frank does is that he pay payroll taxes on the salary portion. And he's going to do that actually quarterly. And this is something that a lot of people, when they set up an S-Corp, they don't realize they have to do. But you absolutely must do this. You need to get set up both at the federal level and the state level to pay payroll taxes and unemployment taxes on your salary. And Frank's going to do that quarterly, so he's going to split it up into $5,000 payments. He's going to say, for the first quarter, I paid myself $5,000. And the payroll taxes on that, both employer and employee, are going to be about $700. So he's going to file a payroll return at the end of the first quarter and pay the $700 in the taxes. He's going to pay a little bit more to the state of Florida for unemployment tax, and he's done. Then the next quarter, he's going to do the same thing. He's going to report another $5,000, pay another $700 in taxes, and he's going to do that all year. At the end of that year, he's going to get a W-2 from his business, and it's going to say he made $20,000 in salary, and he's paid all the payroll taxes he has to pay. So he doesn't get hit with that $7,000 hit that he would have got as an LLC. He's going to end up saving himself about $4,000 at tax time, which is huge. And you know, a lot of my small businesses that come in, they're not making this kind of money at all, especially when they start up. Most people don't have a payroll at all the first year. It's not unheard of. So what I normally do with my people is I check with them every quarter. I call them up in April and I say, how did the first quarter go? Did you have a lot of sales? Did you have a lot of real estate commissions? Did you, where are we? What are your net numbers looking at? And they say, I had a great quarter. I sold 3 houses, so great. Let's put some of that into payroll right now. And we'll talk about that number. How much do you want to put in? Do you want to put in $2,000? Do you want to put in $5,000? Where do we think we're going to be at the end of the year? And then the next quarter, maybe you didn't sell anything. So what we're going to do that quarter is we're going to do a 0 payroll. And we're just going to play it by ear. And where we want to go is at the end of the year, when you're ready to pay your taxes, you won't owe anything because you've already paid everything you need to pay as you go along. And then there's no big tax hit at the end of the year. And that's essentially my goal with my clients, is we get to the point where they don't owe anything, they're not getting anything back. They can come in painlessly, pay their, file their return, and they're done. So hopefully that helps. But like I said, every business is different. It really depends on your personal situation. It depends on whether you have partners or not. Oh, there's one thing I should throw in about the S-Corps as well. Not everyone can qualify for an S-Corp, and that's important to know. You can't have more than 100 shareholders, which most of us, that's not a problem. We don't have it. But people like, companies like Duke Energy, they're not going to qualify for that, obviously. You can't have a foreign business partner. So if you partner up with your buddy in Canada, you're not going to qualify for S-Corp status. And you also can't have another form of corporation as a partner, like somebody's LLC. Those are all disqualifying. So it's important. Most of us do qualify for the S-election, and it could be something that could really benefit you tax-wise. Mm-hmm. So I recommend that you sit down with an attorney, somebody who specializes in taxes and corporate law, and make sure you get the right structure set up for you, and you get things like payroll in place from the start, because mm-hmm. you will start getting very nasty letters from the IRS and the Department of Revenue if you don't.
Yep. Been there.
Good for
I've
me.
Been there.
But I would rather help you get started the right way
mm-hmm.
than have to try to get you mm-hmm. out of the mess with the Department of Revenue a year down the
yep.
road. So.
And each person has a different scenario, like she said. So what we would like for you to do is to go ahead, and if you have a comment, question, go ahead and put it in the comments below. We will make sure that Diane gets those questions. She will answer you as quickly as we can get to them. We try to answer every single question down there. Don't forget to subscribe. Don't forget to smash that bell so you can get notified, because what I'm going to be doing is meeting with Diane, and we're going to put out some tax tips, because taxes, at least for me, run all year. I don't just get to stop once a year. Mine run all year long. We're intimate at this point about taxes. So go ahead and hit that smash button. Go ahead and subscribe. If you guys have any questions that you want answered, put it in the below. Diane, tell them how to get a hold of you.
I am at Griffith Law and Tax, GriffithLawTax.com. And I'm always on Facebook, so give me a shout, and I'll be happy to respond to any questions you have.
Great. We'll talk to you. If you guys need anything about the local market here in Gulfport or Pinellas County, Hillsborough County, feel free to hit me up. I can answer those questions for you. Gulfport is one of the most lovely little towns you're ever gonna know. But you can always catch me on Facebook. You can DM me there. You can call me directly. It doesn't matter. Until the next time, guys, we will see you.